Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zach Meir with the Bulletin Board Heroes here on Share Talk for Wednesday, the 29th of April. Starting off with Braveheart, where there's been a little bit of a wobble there, down to 17p intraday at the lowest, but back like a cork in water since then, and approaching the last target we had of 35 pence, which looked rather ambitious. Doesn't look ambitious now, and best case scenario in the near term, target up to 40 pence. But obviously that can be revised higher depending on the price action after today. It certainly does look very strong indeed. In fact, could argue that resistance line there is up to 45. But anyway, we're in a bull market, so almost all the targets on the upside can be hit these days. So up to around 40 plus while we hold above that last peak there from 2016 around the 22 pence. Sorry, that's rather higher than that. 22 pence area, so 23 pence area, in fact, on that particular intraday peak. So looking quite set fair on Braveheart at the moment. Next stock is one that somebody asked me about on Twitter, and asked me yesterday actually when it looked rather sad, but today Brave Bison looking rather more healthy. Wonderful solid green candle there above the 50-day moving average at a penny, and while we hold above the 50-day line, looking for at least 1.6 pence, which is that November resistance line projection on the shares. Obviously above that we've got gap to fill towards 1.8 and the main 2 to 2.2 pence resistance, so really looking very good indeed as far as Brave Bison are concerned, especially after I think the whole thing started really with that break of that old February resistance line at 0.8. So doing well at the moment. Gold stocks have disappointed, I have to say, given the massive inflationary forces unleashed by central banks, helicopter money, etc. It's surprising that the gold stocks haven't performed in a way as strongly as the pharma stocks, which have obviously been the winner so far. As far as Condor Gold is concerned, looking for a target here up to this resistance line projection from June at 50 pence, and that's valid while we hold above 30 pence, which was the initial April resistance area. All the near-term moving averages currently rising, which looks very healthy. Onto a pharma stock, which is just getting underway, I suppose, at the moment. Beautiful V-shaped bull flag break that we've had today. Just seeing whether the stock actually gapped up through that, and it did. Next target above the 200-day moving average at 82 pence on an end-of-day close basis would be up to this resistance line I'm about to draw at the moment, up to £1.60, £1.60 plus. That's the top of a broadening triangle from way back in May last year. So that stock, if you missed out on the other farmers, that looks like a possible contender. Dukemont take a long time to deliver for the bulls. Obviously, we had the bull run going into the start of the year, but it looks like there's a new wave now with the shares breaking through the 50-day moving average at 0.54, and above that looking for further significant upside, possibly or hopefully up to the top of the broadening triangle that I'm drawing there, 1.1 pence, and that the time frame on that up over the next 1 to 2 months. For the stock. A weekly close above the 200-day line at 0.67 would cement the idea of a reasonable recovery on the shares. Escape Hunt, another stock which is very much in recovery mode here after the flat price action over the last 6 weeks or so. Very disappointing. We had that new leg down from the beginning of February. Obviously, that was with the market crash that we had, the COVID crash. The view now is at end of week or end of day close above the 50-day line around 7.5 pence. Could take the shares back towards the 20 pence area with the last February intraday peak. Excitement on the technical front also as far as IQAI is concerned. IQAI Limited with the break of this 50-day moving average and that November resistance line around the 2.8 pence level. We've broken neckline resistance at 3 pence today, and above that we're looking for, 3.7 pence actually. Above that, looking for a return to the post-November resistance at 6 to 7 pence over the next few weeks. So 6 to 7 pence while we remain above 3 3/4 on that particular situation. On to Kavango, which is performing well at the moment. So just breaking out of this this November resistance line there and the point at 9 pence zone. While we're above that, looking for a return towards the bottom of that February gap at 1.5 pence over the next few weeks. Next situation is one which has been recovering or been in the recovery zone for the last couple of sessions now. I need to see an end of week close above the 50-day moving average, currently around the 0.9 pence level for location sciences. And if we can do that, then looking for a return back towards early March resistance at 1.5 pence plus for this particular situation. Still looking at another recent stock which was covered on the Bulletin board here as one which has doubled basically since we looked at it. It was around, I think, 2.8 pence a few weeks back. Current situation, we've hit the 6 pence target, which looked rather optimistic, and now looking for a fresh target here up towards 8, up to even perhaps 9 pence over the next few weeks, given the gap to the upside that we've seen so far. So looking very encouraging indeed on that particular stock. Stock which actually even caught me by surprise after being requested a few days ago is Physiomix. Here, vertical move here through the 3 to 4 pence area, which was the original target zone, let's say. Absolutely massive spike that we've seen for the stock. Just interesting now to see whether we can get an end-of-day close or a weekly close above that old April 2018 9.3 pence high. Above that, we're looking at a best-case scenario target as high as 20 pence, which would take us back to where we were in late 2017. Finishing off the marathon session with a stock which I couldn't resist looking at, just given the way that it's suffered so much in the past, and presumably its shareholders have as well. Westminster Group, looks like its time may finally have come with the COVID crisis, breaking the 200-day moving average at 10 pence and that line of resistance from July. And above that, target here as high as 20 pence, which is basically retesting last summer's resistance. This stage only really back below that early April peak at 9 pence, really upsetting the ongoing recovery argument. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.